Terry, welcome to the interview and thanks for joining me today.
Thanks, Gary. It's a pleasure meeting you.
Give us a little introduction about yourself, how long you've been in the business and kind of what you've been doing.
Absolutely. So my name is Terry Williams. I'm a retirement mortgage specialist with Fairway Mortgage. Fairway's located here in Omaha. I've been doing mortgages since 2001, so approximately 22 years, approaching 23 years here at the end of this year. I started doing reverse mortgages, retirement mortgages 4 years ago at the end of 2019. I just have a passion for helping seniors because I've taken care of my dad prior to him passing, and I take care of my mom now. She's 89 years old. I see the struggles that the seniors go through, living off of a fixed income, limited savings, dealing with inflation like everybody else, higher gas prices, higher food prices, higher energy costs, higher property taxes, higher home insurance, multiple factors that are impacting seniors. The retirement mortgage gives seniors options. So I help seniors understand how the home plays into their retirement strategy, gives them the ability to appreciate their home and utilize their home properly, Gary.
Good summary there. So I think reverse mortgages get kind of a bad rap. So can you describe what a reverse mortgage is?
Well, a reverse mortgage in its most basic sense, Gary, is any loan secured or collateralized by a home where the lender defers payment of principal and interest until some later date. Gary, if you and your wife Linda have a mortgage today and the lender said, would you like to defer payments of principal and interest until some later date? Well, that's a reverse mortgage in its most basic sense. It's a loan collateralized, securitized by a home where the lender is deferring payment.
And so the term HECM, what does that actually mean?
HECM, Home Equity Conversion Mortgage. HECM, Home Equity Conversion Mortgage, is the current reverse mortgage that was put in place. Ronald Reagan signed into law in 1989. A HECM is a federally insured mortgage loan. Again, FHA is a government institution, part of HUD, Housing and Urban Development, offered to senior homeowners 62 and above. Only one of the seniors has to be 62 to allow them to access a portion of their equity in either chunk cash payments. They can take out $5,000, $1,000, $10,000 as they need to fix a roof, to fix an air conditioner, buy a car, and it turns equity into cash. Another option is they can take an annuity stream from equity that is turned into cash. So they could get an extra $700 a month till they decide to permanently vacate the property, or they can just get a line of credit, and the line of credit has some unique features. How do most seniors access equity? They typically have to sell the property to access the equity. What if we allow the senior to stay in the home and access the equity and align the home with their retirement strategies in how they pay their bills, how they provide for in-home care, groceries, gas, and medicine?
So do I have to actually have an existing home right now that has equity in order to get a reverse mortgage, or can I actually purchase a home? Is that possible to do that?
Yep. So there's three scenarios. And remember, a reverse mortgage has all of the same features as a traditional mortgage, a 30-year fixed or a 15-year fixed. So you can refinance a house free and clear. You can refinance a house with an existing mortgage balance, and you can buy a house with a HECM for purchase, it's called. Home Equity Conversion Mortgage for Purchase was put into place in 2008 by FHA and HUD. They set up a HECM for purchase program, so you contribute a significant quantity of equity up front, and then that allows you to live in the house the remainder of the time that you occupy the property. As long as you occupy the property, then you get to live in the property. So a HECM for purchase is definitely an option. And there's a lot of seniors right now. As you know, you're seeing these seniors, they're in 2 stories where laundry and restroom facilities or bedroom are on the second floor and they have to go up and down stairs with bad knees, or they're just not strong enough to go up and down the stairs, or laundry in the basement, or they live on an acreage where they have a large area to take care of. And sometimes the houses that just become too much for them, it becomes an unsafe residence for them. So what if they could sell that existing unsafe house and purchase a safe house, a villa, a townhome where laundry, bathroom, and all of their facilities are on the main floor, like a zero entry townhome where they didn't have stairs, snow removal, and the lawn mowing, landscape care is done by a homeowners association versus the homeowner trying to do it themselves.
But specifically with a reverse mortgage, what are the costs in order to get one of those?
The standard costs that are applicable to any traditional 30-year fix, 15-year fix, the reverse mortgage has the same set of fees. Then you have loan origination. In the loans that we're putting together right now, because of the current interest rate environment, we're charging upfront loan origination fee. Those are very similar, and those loan origination fees are regulated by FHA and HUD. So the minimum amount of origination fee that I can charge is $2,500. The maximum amount of origination is $6,000. So you can't overcharge the senior. It's important that the seniors are well taken care of. Then the one piece that is different, it's an FHA mortgage, so it has the same underwriting on a traditional 30-year fixed FHA mortgage, except the upfront mortgage insurance is paid out of pocket. And whether the client uses equity to pay for that upfront mortgage insurance, or they use cash when they purchase the property, and that's 2%. So that's the one cost that is higher or different with a home equity conversion mortgage or retirement mortgage, is there's a 2% upfront mortgage insurance funding fee. And so if a house is $300,000, the 2% upfront is $6,000. That's paid out of pocket or paid out of equity. That's the one piece that is different than a traditional 30-year.
So we have the cost. Is there any specific qualifications to get a reverse mortgage?
Yep. They've implemented some guidelines in the last 7-8 years. In 2014, there was quite a bit of updates to the program, and you have to do 4 things to honor the contract you have on your current mortgage. Number 1, pay the mortgage payment on a monthly basis. You have to pay your taxes, pay your home insurance, and live in the property as your primary residence. So retirement mortgage has the exact same thing. That senior homeowner has to have shown that have been responsible enough to pay their taxes and their home insurance and their HOA dues, if applicable. So they look at a 2-year period, make sure that that senior client is deserving of a reverse mortgage, where home equity conversion mortgage does not require an escrow account unless they have not paid their taxes, homeowners insurance, and HOA dues on a timely manner. If they do 4 things, pay the property taxes, pay the homeowners insurance, live in the property and maintain the property, just like they currently do, the senior client can occupy the property for as long as they choose, and only when they vacate the property. If it's a single individual, when that single individual vacates the property permanently, they go to assisted living, they go to live with a child, or they go to heaven, then the heirs or estate have to step in and sell the property. Or if it's a married couple, as long as one of the married couple is still occupying the property, then they can live in the property until age 150, which figured out the fountain of youth yet. So at 150 is a long ways away. My mom has a reverse mortgage. She's 89 years old. She doesn't have to make mandatory monthly payments, does not have to make principal and interest payment, but she does have to pay the taxes, pay the homeowner's insurance, live in the property and maintain it. And she can do that. Maybe she's 89 today, maybe until she's 109. Just depends on her health. But think of that. She isn't required to make a monthly payment.
So let me ask you this. So I know one of the things that I would worry about for my kids, if I were in this situation, is that obviously market shift here and there. We're actually in a shifting market right now as we shoot this video. Somebody comes in, they do a reverse mortgage, they borrow all the value of that reverse mortgage up to the value, and the house actually decreases in value. Parents are both either out of the house or have passed away. Are they responsible for any shortfall?
Nope. Reverse mortgage is a unique product. Unlike a 30-year fixed, that personally responsible to repay the debt and the house is collateral, Gary. So that is a recourse loan. A reverse mortgage is a non-recourse loan. And a non-recourse loan means that senior homeowner, whether it's an individual or a married couple or a domestic partnership, they are not responsible to repay the debt. The house is 100% responsible to repay the debt, Gary. And so a reverse mortgage does not report on the senior homeowner's credit report. Like my mom, if she lives to be 109 and by chance the house is upside down, the house is worth less than what she owes, neither my mom, myself, or my mom's estate have any responsibility to repay any of the debt.
I think you just literally put some minds at ease, because I think that's kind of one of the biggest things with kids of aging parents is worried about is just the value of that house and being stuck with debt. Terry, I appreciate you coming on here. Is there anything in conclusion here that you want to add that maybe I didn't ask a question on?
I think the biggest thing is to go along with the non-recourse feature, Gary, you still have title to the house. So just like you own your house, Gary, and you have title, my mom owns her house and she has title. She just has the ability to make optional monthly payments versus mandatory payments. Right now, seniors have never been under more pressure than what they're under right now. They're living on fixed incomes in many cases. Inflation is impacting groceries, gas, medicine, property taxes, home insurance. There's just kind of a perfect storm. A reverse mortgage, a home equity conversion mortgage, a retirement mortgage, whatever you want to call it, works well for people that have limited option, and it works even better for individuals that have options, affluent homeowners, because of the financial strategies that are involved with a reverse mortgage. So this is not a product of one size fits all. There's a lot of features to it. People really need to be educated, and that's the number one thing I try to do, Gary, is education. It doesn't fit for everybody, but at least I want my clients to be educated so they can make the best decision for them and their family.
Well, Terry, I just want to thank you again for joining me for this interview to be able to answer some questions that so many people are asking about reverse mortgages. And I think that at the coming years here, it's going to be an amazing piece to be able to help the seniors in their home. Terry's going to be at our Wednesday night senior planning workshops, and you'll be able to come out and ask him additional questions that you may have. You could also reach out to him. Terry, what's a good number they could reach you at?
So they can reach me at 402-301-4500.
Perfect. And of course, if you're interested in the senior planning workshop, you can go to OmahaSeniorPlanningWorkshop.com, or you can also reach out to me at 402-680-7000. Thanks a lot, Terry. And we'll see you guys